Morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from Ticket Talker for June 29th, 2021. This is a very, very interesting day. We're going to talk about the gold market, silver market. We're going to talk about Coinbase, Bitcoin. And basically take a look at the weekly AI that was produced and published last Saturday by the variable changing price momentum indicator, and see what basically it's telling us as we move forward. We'll be right back. Welcome back here. What I want to do here is share with you a weekly report that we just published. And let's see if you can hear this.
Summary. The weekly trend momentum of 1838 is bearish. The weekly VCPMI of 1782 is bearish price momentum. A close above 1782, stop, negates this bearishness neutral. If long, take profits from 1797 to 1812. If short, take profits from 1765 to 1749. Trade instructions.
I'm not sure if you're able to hear this. I was having some technical difficulties this morning, but
closed at 1778. The market closing below the 9-day SM at 1838 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Trade instructions. Weekly price momentum 1782 bearish. With the market closing below the VC price momentum indicator at 1782, is confirmation that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish trend to neutral. Trade instructions. Weekly price indicator. Exit, S1, longs, 1797. Exit, S2, longs, 1812. Exit, B1, shorts, 1765. Exit, B2, shorts, 1749. Look to take profits on shorts at the buys 1 and 2 levels of 1765 and 1749, and go long on a weekly reversal stop. If long, use the 1749 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1798 and 1812 during the week.
For those that probably had a problem at the beginning, let's see if we can run it again.
Summary. The weekly trend momentum of 1838 is bearish. The weekly VCPMI of 1782 is bearish price momentum. A close above 1782, stop, negates this bearishness neutral. If long, take profits from 1797 to 1812. If short, take profits from 1765 to 1749. Trade instructions. Weekly trend momentum, 1838, bearish. The gold futures contract closed at 1778. The market closing below the 9-day SM at 1838 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Trade instructions. Weekly price momentum, 1782, bearish. With the market closing below the VC price momentum indicator at 1782, is confirmation that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish trend to neutral. Trade instructions. Weekly price indicator. Exit, S1, longs, 1797. Exit, S2, longs, 1812. Exit, B1, shorts, 1765. Exit, B2, shorts, 1749. Look to take profits on shorts at the buys 1 and 2 levels of 1765 and 1749, and go long on a weekly reversal stop. If long, use the 1749 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1798 and 1812 during the week.
Are you looking
I wanted to share this weekly report because it looks like we completed the weekly targets, or we're in that range in gold of 1752 last, and the range is 17, obviously, as you heard, 49 to 65. So for whatever the reason, the market came down into this level here, and we could talk about that. There are a lot of reasons why the market looked like it was going to test its lows here, but whatever the reason is, it's irrelevant to the mathematical calculation, in that it's telling us that the market on the daily basis is extremely oversold. Extremely oversold. It's below the B2 level daily, and that means that basically the daily system is neutral. Once it closes below the B2 level, it goes neutral. Then basically we take a look at the relationship when that occurs of where the weekly is in relation to the daily. And as you can see here, the low was 1750. The buy 2 weekly is 1749. So we're coming into a level probability-wise telling us that this is an area that it recommends to accumulate positions. We're at the extreme below on the weekly level. And the probability here is that this area is basically in the 90 to 95% probability that more than likely, a good chance mathematically that this is the area that is going to attract buying or accumulation of supplies. Mathematically speaking, this area is a very high probability. Now, the market is the one that will always confirm. And the structure that we're using here, obviously, into this pivot points is telling us that we are at an extreme level now, and basically the weekly signal is activating buy triggers or at the level where you want to see a reversion unfold. A reversion to the mean unfold, we're looking at the mean back up to 1781. On the weekly mean, for example, you're looking at a 50-50 standard deviation. The buy to level is a 95% standard deviation to the mean, which means that if the market validates and confirms a reversal from this level, and it would either be coming down to 1749 again or closing above 1765, it would confirm that we have seen a reversion unfolding. The target of 1781 is at hand. So I am not too anxious or too, you might say, excited about selling at these levels as much as accumulating assets, depending upon your profile, that you want to be able to hold on to this position, because I think we're looking at some really probably below fair value now in the price of gold. Let's take a look at silver. And in silver, we saw massive liquidation here this morning that brought the market down to about 25.58 on the low side. But if you're taking a look at the congestion area that we see here at these levels in blue, daily and also weekly, on this chart in silver, I include the 360-day cycle by trigger by one that is at 25.85 that we've been testing here now for a few days. And once again, the methodology, mathematically, the algorithm is telling us that this is a very high probability area where you can expect to see buyers, accumulation of supply. Now, mind you that what the VCPMI is, and what the way I use it is as a GPS that identifies for me where the highest probability areas or the extreme levels of supply and demand. And what we're looking at here mathematically is that the price now in silver is at a mathematical relationship between the daily, the weekly, and the 360-day cycle that is identifying the area where you want to accumulate. And again, depending upon your profile, then you can implement the strategy accordingly. But if we use it just as an indicator, as a GPS, as I'm pointing out to you, we want to see the market validate this, confirm this analysis, this AI, by closing above 25.85. Just by closing about 25.80, it's going to give us the daily and the weekly. But about 25.85, it puts this signal in a very, very high probability that we have accomplished, you might say, an alignment primarily on all of the trends. It's early in the week still, and so we are going to continue to use the weekly numbers, as you see, that very clearly shows the market is in a blue area or an area of accumulation of supply. Let's go back to the trade station platform here. On the daily, on the chart, you can clearly see the market is below the B2 level. And so once again, we're just letting the market do what it's got to do, and then we will identify the trigger points if we want to day trade the market. Let's watch the market here for a little bit here while I do some updates here, and I will catch up with you in a little bit. Let's take a look at some of the markets here that we track and see what the VCPMI is telling us here besides the gold and silver. The dollar index is up to 92.08, and it looks like it's completed the target of 92.20, and it's reverted back down. And the US dollar strength is, I believe, a short-term challenge that we've had to deal with regards to the gold market that's precipitated this correction. But one of the things that I want to point out to you, and I want to bring into focus, is that the metals markets right now are dealing with Basel III decision, basically to increase the financial requirements for central banks that provide unallocated precious metals, gold and silver. And that essentially means that they have a requirement now that they have to put up dollar for dollar of unallocated precious metals, or leased inventory that they have. And so it puts a lot of capital restrictions and demands now on the central bankers that they have been trying to desperately reduce the massive short positions that they've been pretty much holding the market hostage by it since 2012, the longs, I should say, by acquiring massive amounts of paper futures contracts that basically are completely out of the reality of even a yearly production. In some cases, a 10-to-1, for example, leverage in supplying futures contracts when the world production doesn't come close to it, so it's been a very difficult process, I think, over the last few years, since about 2012, to identify the price discovery for gold. And the gold market is a very tricky market. Obviously, it's the other side of the US dollar. So, it is quietly always manipulated by the other side of the gold market, which is basically the US dollar. And so the powers to be will do whatever it takes to maintain the integrity of the US dollar against other currencies, against gold. Particularly as we move into this incredible debt level that, in my opinion, is unsustainable. The balance sheet of the Feds is over $8 trillion. The economy is flooded with cheap money. Interest rates are still relatively low. And the benefit, obviously, in terms of this market right now, shows that it has benefited basically the 1%, primarily the 1%. Assets have exploded in value. Real estates have exploded in value. And during this unprecedented times that we are still dealing with as the pandemic, Australia has gone into lockdown for a couple of weeks. They're not finished yet with this pandemic, and there's new variants showing up. England also has applied quarantine measures. And so I don't think it's over. I think the U.S. is in a very good position that we seem to be the ones that are managing this. But when you take a look at the price of gold in relation to the debt, interest rates, the stimulus, it's really difficult to explain or to justify this anomaly in the price of gold and silver, which, in my opinion, are money and have been money, currency for thousands of years. We have introduced other assets like GBTC, for example, or coin. I use GBTC as the grayscale Bitcoin investment trust that essentially is an easier instrument to follow. It does follow the futures markets Bitcoin contract, and there is a price difference. There is a spread, but when you trade the price, it really is irrelevant in terms of that, because it's just a question of choice of instrument and how you want to manage the risk of that instrument. So if you're comfortable managing the risk in the futures contract, that's up to you. We use the futures contract, as I said, as a GPS or as a direction for us to identify some of these trading opportunities. Coming back here to the gold market, we are, as you can see, experiencing a liquidation phase. And I think, when you think about the end of the month right now approaching, and expiration of options approaching, Basel III approaching, and it sets up the scenario that we're looking at, basically, that it doesn't make any sense why the price of gold and silver should be coming down. Now, if you're a long-term investor, if you're a trader, obviously you trade the market short-term, and we use the futures markets to trade the market short-term. But I truly believe this anomaly is going to be adjusted in the price of metals, unlike we have never seen. When this pressure of price manipulation is eliminated, the price of gold needs to adjust to its pretty much intrinsic value, its real value, its mean. And I believe the central bankers are becoming aware that under these circumstances, where they are printing unlimited amounts of money out of thin air, creating stimulus to pump into the economy, it's only eating away at the intrinsic value of its currency. And so the real issue is not prices going up because of a bottleneck, short squeeze, and the supply chain. But the bigger picture is that as they print more money, the US dollar continues to erode in value. And so the question I guess the market is asking is, at what point are they going to eliminate the stimulus? And obviously those discussions are being made right now as we move into the second and third quarter of this year. And we're going to see how the feds deal with this fiscal policies and monetary policies. That the danger is really, and that if they continue to print money, there's no other alternative but the US dollar to collapse in intrinsic value. And that would be really, I believe, a beyond inflation hitting upon us that could enter hyperinflation if that's the case, if they allowed for that to happen. So we're coming up against higher interest rates, which was the catalyst, you might say, for the market in metals to be hit the way they have. And I think that the reaction that we saw was pretty much overdone, and we're beginning to see some of these markets beginning to adjust. And so taking a look at, across the board, you might say a lot of these markets are making bottoms. The grains are making bottoms. A lot of sectors, including virtual currencies, that got hit pretty hard during the FOMC meeting, since nothing has changed, basically, fundamentally, I believe are regaining its momentum, its trend, and I don't believe it's to the downside. Let's see how the metals here react to this expiration here as we move into the end of the month. But I believe we are coming close to what could be a major bottom formation or major bottom taking place, and look for the market basically to validate for us when those entry points take place. So continue to trade the market from the long side. We are in an oversold condition, but do measure the risk and volatility that we're getting here, which I believe is only the beginning of what's going to be unprecedented. I will continue to update you throughout the day in my live trading room, and please subscribe so that we can continue to share this information with you during this time. And in the meantime, have a great trading day. I'll talk to you soon.